In the previous lessons, we have talked about how the money can grow and convert into wealth. We also talked about how in real life situation, a person does not make a one-time investment, but investment has to be a continuous process. Especially for a salaried class person, it is a regular monthly or quarterly affair. Now if you search the net for various type of investments or for the best investment, then you will get about 1,000,000 results in a fraction of a second. And this ocean of information will confuse you more rather than making any solution, or rather than offering you any solution. So let us get some clarity about the topic or the word called investment before we actually talk about the various investment options or the various investment avenues available to us. So if you ask me, I would club any of the investment into one of these three categories. The first one is the participative investment, the second is the entrusted investment, and the third is a personal asset investment. Now what are these? Participative investment is basically equity based, where you are participating in the growth and prosperity and profit of the business where you have invested, like a partnership venture or buying the shares of a company or things like that. Then you have the entrusted investment, where you are just entrusting your money to somebody and you are not actually participating in their business. And the third is the personal asset ownership, where you purchase an asset and then you wait for an opportunity for the price of that asset to appreciate. Let us talk about these in a little detail. Participative investment, as I said, you are becoming a partner in the business, or you are buying the shares of a company or equity mutual funds, where if the business grows, then your investment also grows. If the business suffers, your investment also suffers. And therefore, there is no certainty about the returns. The returns are variable. Second is the entrusted investment, which is basically debt based. You are actually giving a loan to somebody, and that somebody could be the government, could be a private company, could be some organization, like you are buying the fixed deposits in a bank or the company deposits or government securities, bonds, debentures, treasury bills. All these things promise you a fixed return, but you don't participate in the business of the person who has borrowed your money. And generally, these returns are predetermined in the form of interest. Sometimes they are slightly variable, like in the case of bonds, debentures, and debt mutual funds. And then the third is the personal asset investment. Here, you have the ownership of the asset, like you buy a real estate, a house, a property, or maybe gold, ornament, jewelry, commodity, precious metals, currency, crude oil. All these things, you purchase them and then you wait for an opportunity for the price to appreciate depending upon the demand supply situation, and when the price appreciates, you sell them off. There are no certainties of appreciation or depreciation in such assets. It all depends upon the macroeconomic conditions in the country. Alright? So I hope the three broad types of investments are clear to you. Whenever you are making an investment, you have to club that investment into one of these categories and then analyze it further. We shall see the details about these in the next lecture.